Hello and welcome. You're watching Last Take. I'm Shweta Kothari. With me in the studio, Suyash Maheshwari. Suyash, hi, good afternoon. A very volatile session on Dalal Street today.
A very volatile and a very interesting session for the Dalal Street, Shweta. We opened on a flattish note. Thereafter, soon after, we took off, and Indian markets was able to climb almost 0.9% through this session. We even rescaled that October swing high of about 19,843 on Nifty, wiping out all the losses that we saw between, the sharp correction that we saw between October 16 to October 26. But in the last 45 minutes or so of trading, we saw some profit booking take place, especially led by selling pressure in large caps such as your Axis Bank, ICICI Bank and Larsen & Toubro, which took the index below the 19,800 mark, significantly below that, and the index also settled there. As you can see on your screen, Nifty ended 0.46% higher in today's trade at 19,765 mark, whereas the Sensex was up 0.47% and ended marginally below the 66,000 level. Now, the real story, I think, is playing out in the broader markets. They have shown good bit of resilience. In fact, we have been talking about Nifty small cap scaling new highs on a pretty much on a day-to-day basis. But today's session, we saw a record high level for Nifty Midcap. Now, Nifty Midcap 100 touched a record high for the first time since September 12th. It surged to about 41,800 sort of levels. But ultimately, in the last 45 minutes of profit booking that we saw, it also corrected and settled around 100 points shy of that record high levels, up 0.78%. Small cap index also scaled a new lifetime high of around 13,900 mark, but ultimately settled about 35 points off that high, up 0.58% in today's trade. Volatility, which was in the morning session, was up about 1% or so, spiked as the session went by. It was India VIX settled 4.6% higher for the day, at around 11.65 sort of levels. Now, Shweta, I was also looking at some of the key indicators about the markets, and the statistics suggest that the tide is still in the favor of bulls. Of all the, if you can pull up that market roundup graphic, you'd see that the entire volume, the breadth of the market is still leaning in the favor of the bulls. Of all the stocks that trade on NSE, around 1,300 shares advanced, whereas around 1,168 shares declined, whereas around 128 shares remain unchanged. 118 stocks today, Shweta, hit an upper circuit, whereas only 49 stocks were at the lower circuit. In also, stocks that hit a 52-week high, there were about 181 stocks that hit a fresh 52-week high in today's trade, whereas on the other side, around 8 stocks hit a fresh 52-week low.
All right, so the advanced decline ratio favoring bulls there on Dalal Street. Let's get in Rohit Srivastava, founder, market strategist, India Charts, into this conversation. Rohit, good afternoon. Good to have you on the show. Let's quickly understand by what's are you making of the volatility in Dalal Street today? What factors weighing in? We took a look at the advanced decline ratio, and all in all, looks favorable to the market sentiments.
Yeah, there was quite some participation, especially in mid and small caps, that held up. But you see, Nifty's gone back to the level from where it sold off in October, which is close to 19,843, and probably that level is acting as a resistance. We are also entering, the final weeks of expiration, and specifically for the stock options, because after next week, stock options end up attracting margins, and so as you enter that final week, you do see some profit booking. So 19,840 does look like a level to watch out for in the short term. Possibly we see a consolidation below this level for a while before we head higher. We're not ruling out the idea that we head higher, because we haven't seen substantial short covering by the institutional investors that have a pretty big position. In fact, on the short side, it's in fact surprising that afterwards almost now 1,000-point rally, you haven't seen much covering on their front. And you can actually read that both ways. Does it mean that it's coming, or does it mean that they're extremely negative on the market and we should be a little cautious here? Let's see a lot of the excitement that came in after global markets on the inflation and interest rate expectations, a lot of that has got priced in. Let us see whether the market has legs to move higher. So it's a good level. I think 19,843 is a good level to take one step back and just see what happens.
Now, sir, we are also seeing, a lot of exuberance in the broader markets. I mean, it was Nifty small caps that was scaling new highs on a regular basis last week, but Midcap index has also surged to a new lifetime high of around 41,800 sort of levels. Given the participation, as you mentioned, has increased and, the kind of movement that we are seeing in these stocks and the indices, do you expect the party to continue for the broader markets?
So it's a tricky spot, and I say tricky because every time that you do not see the same kind of enthusiasm in the large caps relative to the mid caps, it can also act as a warning sign. I remember that even though bond yields are down, we've spoken about this in the last few weeks, that there's a risk from the steepening of US yield curve towards the potential recession. Now, of course, right now the fears have faded a bit, but has the yield curve steepening really gone away? No, it's just pulled back a bit and it's just sitting there. So why I point that out is, if you just go back to say Jan of 2022, that was again a point at which the Nifty had rebounded after a sell-off in December. And the small cap and mid cap, the small cap index specifically ended up making a new all-time high, but it was not confirmed by a new all-time high in the Nifty, and eventually then market sold off and you had the Russian crisis. Now, so far, the Nifty is making a good attempt to come back, but we haven't seen a new all-time high, and you are seeing that in the small cap. So it is a divergence, not a pretty divergence. It's nice while the trade played out, but we have to look at these broader divergences in terms of, whether there's any underlying risk to the market itself. And so I think this is a good time to just see if that is the case. Like I said, 19,843 is going to be a level to watch.
All right, so wait and watch. That is the message coming in. But also, let's quickly take a look at some of the sectors we are tracking.
Certainly, Shweta. So, across the board, it was a sea of green. But in the last half an hour or 45 minutes of profit booking, did pull some of these indices down. I have 3 indices that I want to talk about particularly. Let's start with Nifty Bank. Now, Nifty Bank, rescaled at 44,000 sort of levels for the first time in a very long time. And the overall view, at least from what we are hearing and what we are picking up from the experts, is bullish. But on the upside, it seems that the rally has, kind of exhausted, because in the last 2 days, the market has not been able to, build on the initial gains that we have seen in the pack. Even yesterday, the index ended about 200 points off the day's high. Even today, about 250, 260 points off that day's high, but still holding on to that 44,000 levels. Another sector, Shweta, which has been in action and, is doing pretty well for the investors is the Nifty IT pack. In the last
scaling about 5%.
In the last couple of sessions, yes. 5% gains we have seen, and it's not just the mid-cap IT stocks that are participating in the rally. The bellwether stocks are also participating. Look at TCS's return. We have that graphic, if we can pull that out. TCS is up 5% in the last couple of sessions. Infosys is up over 5%, and you can see other heavyweights like your HCL, like your Wipro, like your LT up 4 to 5%. So all in all, we are seeing a broad base rally in the IT pack. And
let's ask that to Rohit. That would be a question for Rohit. Rohit, what are you making of this rally in the IT pack? Is it just the numbers that are coming in by way of cooling off inflation in the US and subsequently in the UK? What is leading to this rally?
And also, is it a sentimental sort of a rally? Because we are also hearing chatter of US perhaps slipping into a recession by 2024.
Yeah, to some extent, I think it is purely sentimental. If we look at the entire structure of the advance that tech stocks made from April to September, it is not very, very constructive. It doesn't enthuse us to really think of adding any significant allocation to the sector. I think the only reason it's moving up right now is just on the back of the US tech sector. So it's more the correlation. And maybe some of the negativity which results in trading shorts and so on, they may be getting covered. But overall, an underperforming sector typically remains an underperforming sector, especially the large caps, I think haven't been doing too well. There isn't really any turnaround in activity when we look at the US. So if that is our main market to really focus on, the PMIs are actually sub 50. Okay, it came in at 46 for the month of October, which is actually showing degrowth. So right now, markets are just trying to be forward-looking in terms of enthusiasm around rates and thinking about how things can really improve next year, but they haven't really improved yet. And so that is still a risk to the IT sector that we might just end up overthinking it. But it has underperformed. I would not get too excited. It may just be a bounce on the back of what is happening globally.
Now, sir, another sector that we have been tracking was the Nifty Pharma Index. Now, in November alone, the index has surged almost 6.5% or so. And I was also looking at the price charts for Nifty Pharma. You know, time and again, since at least October, Nifty Pharma has faced resistance near that 15,700 sort of levels. Today also we scaled past that, but you know, ended about 50-60 points shy of that 15,700 sort of levels. Can we expect some sort of a correction, at least from a technical standpoint?
So I wouldn't get too negative about the pharma sector. It had significant underperformance in the previous year where it wasn't really getting past. I mean, it peaked at 15,000 in October of 21. We've gone past that level. We've now taken support at that level in October and actually started to move higher. So this is looking good. In fact, if the market does face any kind of troubles based on the other discussion that we had, then pharma would be a sector where increasing allocation might actually end up taking place. So we should actually look at it more positively. I would think that eventually it gets past 15,700. So I'm not really expecting much of a correction here. I'm thinking that the pharma sector will continue to outperform the market.
All right. So we also have a big IPO opening next week in the name of Tata Technologies, the first public offering from the Tata Group in nearly 2 decades. Last time it came out with an IPO was back in 2004 with TCS. But before we get to you, Shreya Sujatia is also joining us on the studio and she has all the details about the IPO ready for us. Shreya, tell us about the IPO.
Suyash, thank you. So Tata Technologies has been one of the most awaited IPOs since it's after 2 decades that Tata Group companies is going public on November 22. So if we can just pull up the graphics, I would like to explain the timeline to you. So the IPO opens for subscription on November 22nd and it will close on November 24th. The basis of allotment will start from November 30th. Whereas the initiation of refunds will be on December 1st. Finally, the listing date will happen on December 5th. That is when the IPO will go public on BSE and NSE. Now the IPO details. The company has set the price band of its IPO at rupees 475 to 500 per share, with a lot size of 30 equity shares. What is to be noted here is that the IPO is purely offer for sale. That is that the company is not getting any of the proceeds from this. So the investors will offload rupees 6.09. The investor will offload 6.09 crore equity shares.
Right.
Now, an offer for sale does not increase the company's share capital. What it does is it transfers the share from one shareholder to another shareholder. On the upper price band, the IPO size of the Tata Technology is rupees 3,000 crores and its market valuation is expected to come at around 20,000 crores. The IPO, Tata Motors will offload rupees 4,006.2 crore shares, whereas Alpha TC Holdings is to sell 97.1 lakh shares. Tata Capital Growth is to sell 48 lakh shares. So this is the shares which will be up for investors to grab. Now, when we look at the percentage of the division which is there, so the qualified institutional bidders will get 50% of this, whereas the retail investors have been allotted the 35% of reservation. As far as non-institutional investors are concerned, they will be given 15% of shares. Now, the Tata Technology Limited revenue has increased by 26% and the profit after tax rose by 42% between the financial year ending with March 31st, 2023 to March 31st, 2022.
Now, sir, I mean, Shreya raised a very interesting point that the entire offer is an offer for sale. I mean, nothing goes to the company, it's all going to the exiting shareholders. Is it a cause of concern for the investors?
You're talking about the Tata Group, they're essentially sharing the business and allowing other people to participate in the upside that the business might bring. I mean, that's another way to really look at it. Today, you didn't have access to these shares. Now you'll have access to them. Then the question then only shifts to one argument, which is whether valuations are good and so on. I haven't looked at that aspect in detail, and I typically bypass most IPOs. But I'll tell you only one thing, that the Tatas have a history of success, for which, irrespective, it is going to attract a lot of attention. Everybody is going to want to have a piece of the pie. So it is going to be attractive from that point of view, that it has the Tata tag name on it. In fact, the last 3 years, you have seen the entire group stock performance among the best in terms of various groups that are listed. They've all done well. So that's gives them a lot of backup in terms of being able to attract investment demand. So that doesn't look like much of an issue. I think most people are going to be interested in participating and being part of this new business that is going to go public.
Now, sir, another thing that I noted, I mean, the grey market premium before the price band was announced was at about 250 to 300 rupees. I mean, is it a little odd for a company to set a price band below the prevalent, stock price in the unlisted market?
See, first of all, you are referring to an illegal part of the market, which is the unlisted market, which actually should not be permitted, but it's there. It's been there for 2-3 decades. In between, it had disappeared for a while, and it's made a good comeback. When companies think of their listing price, they don't think of the unlisted market, right? They actually think of what value might make sense from an investor point of view. Some of them can be more courteous in terms of providing a good value to long-term investors, and some of them can end up pushing valuations to the top end of the extreme, which is when a lot of investment banks get involved. And you had this whole issue around Zomato valuations. So many people wrote about it 2 years ago. So there are two completely different approaches. History of Tatas is they don't really overprice their stock.
Right.
So to think that they've put it less than what is happening in an unofficial market, I don't think is of consequence.
Okay. Before I let you go, how attractive is the price band?
Like I said, I haven't looked at the valuation angle in depth. What attracts you really here is the name itself. I haven't looked at that to comment on whether the valuation band is right.
Right.
It's the group that is really the attraction here.
Okay, Tata being the attraction here. Well, I think with that, we've come to the end of it. Rohit, thank you very much for taking time out. Shreya, Suyash, thank you for joining us on the show. With that, it's a wrap on Last Tick. We'll be back after a short break.